It has been another very solid quarter of earnings for Canadian banks who've reported so far, beating street expectations. Here to break down Canadian bank performance is Ben Gossick. He's portfolio manager at TD Asset Management, one of our favorite bank commentators.
Oh, thank you.
You're welcome. It's true. I have to say, the numbers have been coming in, I'd say, across the board, looking pretty good. The share price performance,
Yeah, I mean, if you look at the Canadian banks, they've been sort of laggards compared to the market. And at a year-to-date basis, they're up about 2%. It's okay. It's not phenomenal. I think what's really impressive is when you compare the Canadian bank performances to everyone else in the world, if you look at banks on a global basis. So I believe we have a chart. But if you looked at U.S. banks, they were out the gate on tax reform, on deregulation, and they've since pared them back, and they've now converged to the Canadian banks, which is the white line. And that's a bit on the trade concerns, so with China, and also on the shape of the yield curve, what that might mean for future net interest income, and also for where the economy is going. What's really telling is that people were getting really excited about the European banks last year. And so because of issues like Turkey, some softer economic data, Brexit, there's a real differential. So, while we might only be up 2%, I say the Canadian banks have been punching above their weight relative to the rest of the world.
For sure, and that's a great way of illustrating it on that chart. Let's dig into it a bit. I know you've got, and you bring your earnings scorecard with you to let us know kind of who's stacking up against whom. But just before I bring it up, thematically, what kind of stood out in this quarter?
Yeah, I'd say core banking performance. So when we say that, we mean revenues, we mean lending, margins.
What banks do.
Exactly what banks do. It's not some of the stuff, so sometimes they beat on better trading. That's not repeatable. Or sometimes they beat on better provisions, so their credit concerns weren't as bad. These were quality earnings, doing what banks do every day, the bread and butter businesses.
All right, let's bring it up and take a look. You've got some numbers here from RBC, CIBC, it's coming up, Scotia, BMO, National, TD is reporting tomorrow. And the average is pretty darn good. I'm just seeing the average so far.
Yes.
And again, I can see this chart. You guys can't see it yet, but you will. The average beat so far, I think, is at 11% on
Yeah, I mean, you have a core, a mature, competitive market in Canada, and you're getting earnings growth of around 11%. It's pretty phenomenal. 5 banks reporting, about 4 of them with beats, Scotia and Line. 3 companies raised their dividends. If we look on a year-over-year basis, that's about a 7% growth. So shareholders are getting checks in the mail. That's growing by 7%. That's multiples to inflation. And then what we also care about is their capital ratios. Comfortable cushions for every bank.
What do they do with it, though, is the question.
Right. So some of them have done a lot of acquisitions. So Scotia, some have yet to announce acquisitions, but it also supports that dividend growth and future buybacks.
What about valuations? I mean, you did show the chart in terms of where they've gone in terms of compared to European and U.S. banks. What do you see for the Canadian banks in terms of valuation?
They're not cheap and they're not expensive. They're trading around 11 times, but that's where the value is in the market because the market's moved to 16, 17 times. So I say the banks are poised to go higher.
What's holding them back?
They've been impacted more by macro, less than what they normally do. So whether it was people's concerns over housing and the changes to mortgage regulations, people's concerns on the consumer debt loads, those tariff issues, and then also NAFTA have held back the Canadian banks. And we're starting to see some of that start to move away. And there's an opportunity for the Canadian banks to inflect higher.
I want to bring that chart back up that we were just looking at. It kind of breaks out by business segment, some things that were going on. Mortgages, I mean, we've seen headline after headline of like, oh, the housing market's too hot. We saw the new B20 stress test come in and change things a bit. And it actually kind of seems that things are ticking right back up again.
Yeah, I mean, that created an air pocket. If you know the cost of mortgages are going to go up, you're going to go run to the bank and lock in those mortgages. So we saw a pull forward of volume at the end of last year. That created a bit of an air pocket at the beginning of the year. And I mean, look, we're getting about 4% on average mortgage growth. And RBC, which I imagine has a pretty big mortgage book, was at the high end of the growth at 6%. So I think we're actually starting to work through that. And if you look at the real estate data, the prices are starting to move up on a month-over-month basis again.
What bank do you favor right now in terms of the Canadian banks?
So I like the whole segment as a whole. I'd say there's 2 things that stand out as we come out of the quarter. 2 banks that look really odd on a valuation basis. One is CIBC. They're trading at a 10% discount to the group. They've been putting up beats every quarter, and the earnings quality gets better and better. And people were concerned that they were too exposed to the Canadian retail market, and so they bought a bank in the U.S. There's an opportunity to grow. The other bank that stands out on a valuation basis is Scotiabank. They're now, as of today, trading at a lower valuation than National Bank. They've done about $7 billion in acquisitions. The value is going to come in 2020. If you were to look at earnings forecasts from analysts, they have yet to put up those numbers. So people are a bit concerned on the macro in the near term for Scotia, but it does create an opportunity for Scotia on the long term.
Interesting. Ben, always a pleasure. Thank you.
Thanks for having me.
Ben Gossick, he is a portfolio manager with TD Asset Management.